Well, the stock market got hit today, guys, and we have to talk about it. We had the S&P and the Dow each go down 0.9%. We had the Russell down 1.4%. We had the Nasdaq 100 down 1.5%, and the VIX went up over 8%. So today, we're going to break it down. We're going to talk about some stocks, some charts, my thoughts on the markets, moves I'm looking to make in these crazy markets. So sit back, relax, hit the like button, subscribe, and we're actually trying to get 25,000 subscribers by the end of the year. So please subscribe if you guys find value in these videos. Of course, if I earn your subscription, subscribe to the channel and check out my Patreon if you guys want all my moves in the markets. And you guys could also get 5 stocks free from Webull and $50 from M1 Finance. All that good stuff is linked down below. And with that being said, let's get into it. So you guys should know at this point, maybe you don't, maybe you do. We're going to talk about it either way in this video. The market sold off today, right? And a lot of that sell-off came in the beginning of the day. You guys can see earlier in the pre-market, SPY was trading at 472.50, right? We actually talked about this in my video earlier in the day. Then once the markets opened, this collapsed down to about 466, all within the first 2.5 hours of trading. Then we had a bit of a relief rally. We saw SPY go from 467 up to about 469, and that was at about no joke, guys, 3:50 p.m. And then literally in the last 10-15 minutes of the market, we got another leg down. So we saw a sell-off in the pre-market into market open. Then we kind of cooled off a bit, saw a bit of a relief rally. Then 10 minutes before the market closed, we got this next leg down. We went from 468.60 down to about 466, a roughly 0.5% drop in the span of 10-15 minutes. And by the looks of it, guys, on the 20-day chart, we are fighting to hold this trend that you guys can see based on this little trend line that I drew. We're fighting to hold 466, 467. That was also support multiple times last week. And I believe if we break under 465, like I mentioned in my previous video today, and of course, if we break 460, then things might get a bit bloodier. We might be seeing more volatility and selling at that point. But as long as we hold the mid 460s and we plow back through 470, I think bulls are going to be in charge. But again, if we break 465, under 460 especially, that's going to change. Bears will then start gaining momentum. And when it comes to triple Q, let's pop that up and see what's going on. This is still holding the same pattern that we've been talking about, and that's the inverse head and shoulders, right? We have the left shoulder, the head, the right shoulder. We're holding the neckline as of now above 390, and as long as we hold 390, that's going to be good for the bulls, and we're pretty much hanging on by a thread right now. We closed at 392 on triple Q. So I have my alert set at 390 on the bottom side. If it breaks under 390, I'll get alerted. If it breaks above 401, I'll get alerted. And like I've said many times here on the channel and on Patreon, if we break 401, that is where the right shoulder in the inverse head and shoulders is going to complete. So there's a lot going on in the markets, guys, causing this volatility. We all know this at this point. Inflation, CPI, the Fed meeting this week on Tuesday, Wednesday, starting tomorrow, and obviously the next day. You know, we're going to have Powell speak, the Q&A. I'm going to make a bunch of videos on that on Wednesday, so make sure you guys stay tuned for that. There's a lot going on causing this volatility, and we have to be mindful of that. We have to not be oblivious to the fact that there is going to be volatility. And if you guys have been in the markets the past couple of weeks, you know this already because we've seen a lot of volatility ever since the middle towards the end of November, which now that I'm thinking about it, that was almost a month ago. So you guys are not, this is nothing new, right? You're not surprised by this volatility because this is what we've been seeing. So let me know your thoughts. Drop me a comment down below. Do you think the volatility is going to continue? Do you think it's not going to continue? We're going to start seeing the VIX go back under 20 again. And do you think we're going higher or lower after the Fed meeting? Please drop me a comment down below. Hit the like button, subscribe, do all that good stuff. And with that being said, let's talk about some stocks because today it was a sea of red out there, but we did have a couple of names that were green. And on my watch list in particular, those 4 names that were green were ChargePoint, which I'm looking to potentially buy if if it gets to the right price, hopefully around 15, 16 bucks, I can buy some there. Facebook was green today, up 1.4%. Tattooed Chef was green, which I actually own Tattooed Chef. And Activision Blizzard was green as well, which I just initiated a position last week at about $58.80, as I do believe Activision is a pretty solid value play right now with a P of around 17. It's down 40% over the past couple of months, and I did make a video on this last week, so go check it out if you guys didn't do so already. So other than those four stocks, Activision, Tattooed Chef, Facebook, or now known as Meta, don't get on my case here, guys, and ChargePoint, other than those four, everything on my watch list was red today. And we're going to talk about one stock here that's not on my watch list. I probably should add it now because this also was roughly, actually no, I thought it was green and went down. It's CRM. It was green earlier in the day, but it closed barely down. It closed down 27 cents, down 0.1% on the day, and I really like maybe not the 20-day chart on CRM because it's clearly downtrending. It's down about 15% over the past couple of weeks, so that's not too great, and to be honest, it doesn't look like it wants to break out, but if you peel the layers a bit, take a look at some longer-term time frames, let's say the yearly chart, the 3-year chart, CRM looks pretty solid. You know, it got overbought at 311, and we saw the big pullback of about 15-20%. Now we're sitting at 265. We were at 311. And it seems like on this 3-year chart, the uptrend's continuing. We saw buyers step in around that 50 moving average, which has been support for a couple of years here. And on the yearly chart, we're noticing buyers stepped in right around the 180 moving average, popped it up above 250. Now we're at 265. So in my opinion, this corrected. It shook out some weak hands. We saw a healthy pullback. Now buyers are stepping in again to push it back towards 300. In a nutshell, that is what I'm seeing in layman's terms, right? So I really like the way CRM is setting up right now. And, you know, it could potentially keep on going here. Voyager is another one. And let me just preface this by saying Voyager is an OTC stock, over the counter, and with those types of stocks, there's inherently more risk in them, right? They're not as proven, you know, they're way more volatile. There's less liquidity. You know, these things could be problems, right? But if you do have obviously conviction in the stock, if the trend looks all right, then it could end up being a good play. And in this case with Voyager, ticker symbol VYGVF, the chart doesn't look that great, but I'm looking at it more from a longer term perspective. Maybe not a 5-year play, but I'm kind of looking at it from a 1 to 2 year play. I guess that could be considered long term, but that phrase long term is relative to whoever you're talking to, right? If you talk to Warren Buffett, long term is 20, 30 years from now. If you talk to a day trader, long term is 2 hours. So, I mean, it really just depends on who you're talking to. But in this case, I'm looking at Voyager from a 1-2 year perspective. And at this point in time, it is well under where I initially bought it. And I've since sold out of it. So if you guys didn't know, all you guys on my Patreon do know because I post all my moves there. I bought Voyager at $14.70, I believe, sold it at $17, watched it run over $20. Now it's back to $12. So good thing I sold out and locked in my profit, guys. You know, in the short term, I was like, dang it, I missed out on some upside. I sold too early. But now, a couple weeks later, we're down well under where I initially bought it. Now I could buy the shares at a much cheaper price, right? From $12, $14.70 rather to $12. That is a difference of about, you know, 17%. That's a big chunk, guys, when we're talking stocks, right? So at this point, I'm looking at Voyager as more of a speculative play. This is obviously a crypto brokerage, exchange, whatever you want to call it. You know, I think there is a lot of potential here, and especially if we start getting towards under $10, I'm going to be buying it hand over fist, not with a lot of money in terms of, you know, a big percentage of my overall accounts, right? I'm not going to buy a lot of Voyager, but I might stick some, you know, maybe 1-2% of my account in it, a couple percentage points, whatever, and see what it ends up doing there as more of a speculative play. So I like Voyager as it is selling off. I owned it, sold out of it. Now I'm looking to buy back in. And Sofi SOFI is another one that I owned. I sold out of it a couple of times there, made some money, and today I bought back in. Today I bought back in at $14.40. And I told you guys on Patreon, on YouTube, that, and I actually made a video. You could actually go check this. It was on November 23rd or 24th. I talked about Sofi when it was trading at about $18.19 per share, that they had a lockup period expiring for about 17% of their shares or something, and nobody was talking about it. And I mentioned in that video, hey, look, guys, I think Sofi is going to get not necessarily destroyed in the near-term future. That's what I was saying a couple weeks ago, but I thought it was going to go lower. And fast forward to now, present day, it went lower. We went from $18-19 where I filmed that video. Now we're sitting in the 14s. We obviously are in a downtrend. That's very clear. We're down about 40% from the recent high from back in the middle of November. That was at $24.50. And I mentioned to you guys, hence why I have these 3 levels drawn out. I mentioned if we break and fill these certain gaps to the downside, I'm going to buy and buy heavier as it goes lower. So we clearly broke 17. Right, 1750. That was the resistance from the end of September, which was support. So recently it was a support. We broke that. We filled the gap to 16, and I didn't buy any at 16 because I wanted it in the 14s. And we broke 14, or rather 16 recently. That was on, I believe, at some point last week. We broke 16, and today we got the leg down and filled the gap all the way to 1440, which is why I started buying it, because that's where I wanted to get in the 14 range, 13 range. And if we do break 1440, which was support pretty much all of September, and start going to the 13s, guess what? I'm going to cut my losses, guys. Just kidding. I'm not going to cut my losses. I'm going to be buying more Sofi if this gets into the 13s. And I don't know if it's going to get to the 12s, 11s. That might be a bit unrealistic. But at that point, I'll be buying more Sofi. 11, 12, 13 bucks. So I like the fact that it's down a lot. We filled the downside gaps that I wanted it to, and that's all I needed to see. That's the whole thing about the stock market, guys. Have price targets, be patient, and stick to them. That's what I did with Sofi. That's what I'm doing with Voyager. And like I talked about earlier in my earlier video about ChargePoint, that's what I'm doing with ChargePoint. It's sitting at 20. Sure, it could be a good buy here, but I want it lower. I want it at 15, even if that means I lose money, or not necessarily lose money, but miss out on upside if it does start going crazy from here. So keep your eyes on Sofi, Voyager, CRM. Pfizer is another one that I'm looking at here, which is actually on the brinks of breaking out. You guys can see here we have a clear cut. Well, we did have an inverse head and shoulder. We called that out. That ended up playing out today as this stock went up over 4%. And now we're pretty much testing the big resistance that really hit the stock multiple times so far in December and in the end of November, and that's at about 55, 56 bucks. So I think if we clear 56 per share on Pfizer, I'm going to set my alert right there right now. If we start breaking 56, this is probably going to see some momentum, dare I say, up towards $60 per share. That's very possible. And is this at all-time highs right now? It probably is, guys. Let me double-check the max chart here. Yeah, Pfizer is at all-time highs. And obviously, if it breaks 56, we go to 60. That's going to be a new all-time high. So keep your eyes on the momentum when it comes to Pfizer. Apple too, guys. Watch out for Apple. This is going to be, probably it's going to hit this. I mean, it's inevitable, especially in these markets today. Actually, wait a second. It went down 2% on the day. Earlier, it was at 182. It closed at 175. But I think it's inevitable that at some point over the next couple of weeks, this is going to be the first $3 trillion company, not $1 trillion, not 2, but $3 trillion company. And it's crazy because I feel like just recently, and it's obviously, it wasn't too recent, but I feel like just recently we saw the headline, first $1 trillion company. Now it's first $3 trillion company. It's crazy how big these companies are getting. Now we have many companies over $1 trillion. Apple, Microsoft, Facebook's almost there. Obviously, Google's there. Amazon's there. Tesla's, battling between 900 billion, a trillion. So there's a lot of companies now. I mean, not a lot, but a good handful that are in the trillions. And Apple's at 3 trillion almost, which is crazy. And I actually trimmed a little bit of my Apple last week at about 176, roughly, a little bit under 176. Now we're trading pretty much right where I trimmed it at 175.74. And we're down about $7 intraday from that all-time high that we hit at 182.22 today. And honestly, I think there could be more downside in the short term on Apple, and that's the reason why I trimmed it, because it was getting too overbought, way too hot in a very short period of time. And I'm not bearish Apple or anything. I still own a vast majority of the shares that I owned. I just trimmed about 5-10%. But I just think in the short term it's going to come down a bit, maybe towards 165, 170, and then we're probably going to continue this rip. So keep your eyes on Apple. First $3 trillion company in the making, guys. Ford is another one that I'm looking at here, which broke out recently. We actually called this out, the ascending triangle. We broke out. We took out $20.50. We hit almost 22 per share. And today, guess what? We got a much-needed pullback. The stock went down 5%. We closed right above $20.40, which was resistance for a couple of weeks here, over a month actually. So this needs to hold that support. If we hold over $20.40, which we are right now, above that 50 moving average as well on the 4-hour chart, I think Ford is going to get a rush of buyers in to continue this momentum as long as we hold above 20, and this thing could start pushing back towards 22, maybe even higher. So Ford looks good on this pullback, very healthy pullback here. And the last stock for the day, which I'm hoping it starts pulling back more. I mean, today it went down 2.5%. It is Home Depot, ticker symbol HD. This just hit an all-time high at 422 shortly after they just reported earnings, and the stock just got way overblown. Kind of like Apple, way too hot, overvalued. Well, I don't want to say extremely overvalued, but on the chart, it got overbought. That's a better way to put it. And now it seems like it's selling off. We're holding on above $400 by a thread. If this breaks 400, this could be going to 380, 385, which is right by the 180 moving average on the 4-hour chart here. You guys can clearly see it. And that is where I would consider Home Depot as a swing trade, as we've seen many times over the past couple of months when Home Depot has sold off, right? We got to the 180 SMA. That is where buyers stepped in, bought the dip, pushed it up. So if history repeats itself, which it doesn't necessarily have to, but if it does, Home Depot could be a nice buy around 380 to 385, 390. And as always, guys, do your own research. Just because I'm talking about these stocks, just because I'm buying Sofi, I'm doing this, that, trimming Apple, doing all these moves, doesn't mean you have to, right? You must always do your own research, due diligence, understand what you're getting yourself into, and that's when you're going to be in a good spot. When you understand the markets, you've learned, you can make moves for yourself. That's when you're going to be in a position of power, right? So we'll wrap it up there. If you guys enjoyed this video, hit the like button, subscribe. Again, we're trying to get 25,000 subscribers by the end of the year, and it's impossible without you guys. So, I appreciate all you guys as always for being here, watching, subscribing, liking. You guys are great. And make sure to also check out my Patreon if you want all my moves in the markets. You could also get $5 5 stocks from Webull. That's linked down below, which is limited time, and you can get $50 $50 from M1 Finance, also limited time. All of that is linked down below. I'll catch you guys in the next video, which I'll put one here. Check it out if you want to. I'll see you there. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out.